Hi everyone, Mark here at TSLA, and we had a decent day in Tesla world, when the stock that is. The stock is at $277.90. It rose 2.17% today, and this is after the PPI inflation report came out, which is the producer price index, which tracks their costs and the demand for their product. So before we get into the stock and the macro economy stuff, let's start off with some Cybertruck news. Now, this isn't the biggest news in the world, and maybe you've heard it before, but I wanted to share with you guys because I think it's really, really cool. It is that there's some leaked pictures of the Cybertruck castings and body side inners. So this image was sent kind of anonymously to this Twitter user, PMGram86 on Twitter, and you kind of see two. I think there's actually more than two. There might be some in the background, but you're seeing two obvious Cybertrucks, frame only right now, and you'll see the front casting here, and then there's these two side panels, these body side inners, and then there's another casting in the back. Now, this is basically how the Model Y is being manufactured nowadays, where it's two castings, and then there's two body panels, and usually these are made of steel. But what's interesting is that if you notice in the kind of the front pillar area that has this triangular window, like it doesn't look like this is steel. I wonder if this is, I don't remember this being part of the casting, but it looks like it's aluminum. So I wonder if this is just affixed to the panel and to the casting, or if that's actually part of the casting. I really don't know. But so most likely what's going to happen with the Cybertruck, well, number one, it's obvious that a lot of the manufacturing planning and layout of the assembly line is maybe getting to the point where it's actually workable. We don't know if these are prototypes, and we don't know if these are coming off the assembly line. We really don't know. And when I mean assembly line, I know they had a temporary assembly line, but what I mean, like with all the employees working in and stuff like that. I know they were going through a transition where they're taking some employees off the Model Y line, hiring new employees for the Cybertruck line, and having them kind of taught the ropes of how all of this stuff works at the Tesla factory over there in Texas. So this is really cool. That means we're getting really, really close to maybe having a handover event, which is basically splashy event that's televised, or not televised, but media is present, and where they deliver the first Cybertrucks to actual customers. And I'm not sure if those actual customers are going to be employees or people like you and me, but that handover event will kind of mark the beginning of deliveries. And what we're wondering is if production's already started. There's a user on Twitter, Joe Techmeyer, who kind of has a obsession of watching the Austin factory with his drones. So I wonder if he's going to get any sneak peeks with in regards to seeing the line working for the Cybertruck, because there are some windows in the upper portion of the factory that you can kind of peer into. So hopefully we'll see some of that coming through. I mentioned that the PPI report came out, and it was pretty much in line. Let me check it out here. Here you're seeing on Thursday, July 13th on MarketWatch. This is the place I use just to get a kind of a brief synopsis of all the economic data that's coming in over the next couple days and couple weeks. It's a very handy calendar. So you're seeing initial jobless claims kind of came out, and it's just slightly under the expectation. So this kind of changed. I know this is not what's really moving the market. This is a big deal though, in the way that you keep seeing numbers like this, meaning jobless claims that are lower than consensus and lower than previous. And what the narrative might become is, instead of there being a recession coming in the future, or there's going to be really high unemployment, maybe the narrative is simply this: that whatever the Federal Reserve was doing over the past year, it actually worked. They killed demand enough to the point where inflation has come down tremendously, and people are somehow, and I know these 200,000 jobs is a lot of jobs lost, but you got to wonder if we're actually pulling this off. If the government and the Federal Reserve is pulling off would be a no landing situation. Well, you have a hard landing, which is the type of economy everyday people probably talk about in the future, for the future, where there's a really crazy recession like it was 2008, 2009, after the great financial crisis, and people are, losing jobs hand over fist. There's, 10 million jobs lost in a quarter or something like that. That hasn't appeared in the slightest. I mean, to the point where our unemployment rate is probably some of the lowest in the history of this country, especially if you look at certain demographics. So minority employment is very, very high, and their employment is very low. The overall participation in the job market is going up, and the average salaries are slightly above, inflation. So there's real wage gain happening over the last couple of weeks. So it's very curious how we have really high rates, highest rates that you might have seen in the last 2 decades, and the economy is hanging on. And we don't know if they're hanging on just by a thread, but it's hanging on. Tesla is still selling hundreds of thousands of cars all over the world. Somehow, some way, a big ticket purchase like a car is somehow getting turned out. How does that work? We don't know. It could be one of two things: or people are, stomaching the high interest rate on a loan, or there just was a lot of cash in the system. And as prices on cars came down because supply came back and supply chain bottlenecks are gone from the COVID area, that, we can sell cars for much cheaper. And you're seeing a lot of disinflation when it comes to new and used autos, especially used autos. So this is fantastic for the market. It was good for Tesla today. And what we saw was that producer price index came in slightly under expectation, with core PPI in line with expectation. It was 0% before this report. The last report was 0% on core PPI, but it was a really, really big drop from the previous year. So that was like a huge drop. So no one has a problem with a slight uptick when it comes over the month-to-month comparison of core PPI. As far as headline PPI, this is showing that, look, there is all these issues that came out during COVID that caused sky-high prices in all types of parts of the manufacturing process, and then all that was passed on to consumers. And we were flush with cash from stimulus, so we were able to pay for those costs. And so we supported really high prices for a long time. But now input costs are very, very low. And with deflation happening in China, where a lot of things are manufactured, their economy is really struggling right now in China compared to ours. Every economy is struggling all over the world. There's no great economy, but people look to America and our stock market for resilience. And we've showed that to the world that, regardless of really, really high inflation, and the highest and quickest rate hike increases in history of the country, we were able to survive to this point. To the point where inflation is 1% above the 2% target for the Federal Reserve. It was 3% for the last month. Now, we don't know what's going to happen in July and August, but what we're seeing now is that we're getting possibly really close to, waving the victory flag and saying that we beat inflation and that we can get back to normal. Now, that process of getting back to normal is going to be a slow one, because the Federal Reserve doesn't want to just immediately bring rates down and have you go buy out the dealership lot of cars and go down to the mall and buy all the clothes you want. They're gonna pull in rates slowly after keeping them high, so that there's not going to be this whiplash where, okay, people understand that the rates are coming down soon, so we're just going to all buy everything in the world, and inflation comes back up again because everyone's trying to buy something and the industry wasn't prepared for all the demand. So we killed demand to the point where factories, they might be building inventory, they might be slowing down the production of goods, but we do know that their costs are lower, and that means eventually those cost savings will be passed down to you. So PPI kind of leads the CPI. So the producer cost, of course, would lead CPI, our costs, just because they're making it. And Chinese PPI would lead our PPI because they make a lot more stuff than we do, and we buy stuff from them for much cheaper and like to sell it here. So it's all good on the economic front, all the good data. You probably see here on 11:10 a.m. Fed President Daly from the San Francisco area, was on CNBC doing an interview, and she was kind of just spewing the same stuff, that inflation is really sticky, that she'll recommend interest rate hikes if she requires it based off sticky inflation. But for now, she's seeing that there's light at the end of the tunnel, and we're closer to the end than we are at the beginning. That's for sure. A little bit of earnings stuff is happening. Technically, this is kind of the start of earnings season, and earnings season is always going to begin with the banks. So there wasn't much earnings in the last week and a half, but let's take a look at the earnings that came out today and the earnings that come out tomorrow. So Delta had a really decent report, but they sold off because it kind of makes sense that they would be flat or sell off, because Delta had a really big run up. If you look at Delta's chart, it's like a straight vertical line up, because people are already anticipating that travel was getting back to normal per se. But in reality, travel is actually breaking records as far as the number of people flying. The FAA is processing records amount of people through TSA security. So good for the hospitality industry, the travel industry, especially the airlines are really, really good. The airlines are not back to the pre-COVID highs, so there's still movement up, but I think that movement up would be slow going after this really big run. So if you're interested in Delta, just know that it might be a slow grind to equal highs. Pepsi posted earnings beat, and that's the real notable ones that happened before the open today. But they didn't really, these wouldn't affect the market so much as the stuff that's going to come out tomorrow will. We have one of the biggest components of the Dow, which is the United Health Group. So the United Health Group is going to report tomorrow morning, along with JP Morgan, Citi, Wells Fargo, Ericsson, State Street, and BlackRock. So this is a typical earnings beginning where it's the banks. And this is not all the banks, but this is some of the biggest ones. This saving Goldman Sachs and Bank of America for next week. JP Morgan Chase, we're going to be really interested. This really good bank earnings can show that if they're resilient in the face of a lot of unrealized losses when it comes to their bond portfolios. If they're surviving and still keeping their depositors. And JP Morgan has, of course, purchased was it SVB or First Republic? No, First. So they have SVB, I believe, because they're doing a lot of venture funding now. So JP Morgan, we're going to see maybe a clientele that has boosted this company, because SVB had very, very wealthy venture clients and risk-rich people. So we're all eyes are going to be on JP Morgan, our biggest bank and probably the most important bank in the world. But when it comes to the banks, one of the issues that have been holding the banks down, not save the whole unrealized losses from bonds and the regional banking crisis, is that there's a lot of pressure from the Treasury and the Fed that these large, systematically important banks would have larger cash reserves in case of potential recessionary environments. And with the Fed and the Treasury not discounting a recession completely, they're wanting these banks, especially after the regional banking crisis as well, to have more capital. And you probably hear your local representatives and senators really campaigning hard against this, because it would already make it more problematic for the banks, because it would mean they have to keep so much in reserve and not be able to use that to generate income, and their margins are razor thin anyways. But the good thing for now is the banks have been able to utilize the reverse repo fund, which is paying them a really good, healthy percentage on their trillions of dollars. So the government pays people, these banks, to keep money overnight in the reverse repo. It helps keep a floor, and it keeps rates, interest rates at where they want it to be, where they set it. But the reverse repo is being drawn down now, and for two reasons. Number one, to refill the Treasury account via bonds and bill sales. That was the whole purpose of that. And so instead of drawing down reserves from banks and from the government, entities, we're just using the reverse repo fund mostly. About, I would say, 80 to 90% of the Treasury account is being refilled after the debt ceiling was raised via the reverse repo fund from these banks' deposits. So So we're really interested to see the performance of these banks. JP Morgan, BlackRock, uh, I would say the most important. They're very, very large in managed money and just overall assets. Citi and Wells Fargo, these ever since the great financial crisis, these banks have had a lot of issues, a lot of scandals, like literal scandals, people being not just a couple, but thousands of customers being defrauded by these two banks. So I'm really curious to see if they really matter. JP Morgan is going to be the one that can affect the whole market tomorrow, regardless of what great vibes we have from today's price action. These banks and the United Health Group can be really pivotal in keeping this momentum going that we had today, or consolidate even more into more important tech earnings into the week. Into next week. United Health Group is really important. They've had a really bad, not bad, but they had a tough last quarter because of the pandemic. And this is kind of like another pandemic issue, is that a lot of people weren't able to go to the hospital and do surgeries and major operations, especially if they're able to wait. They will be made to wait. And so over the early part of this year, a lot of people were using their insurance to get very expensive surgeries done, and United Health Group had to pay out a lot of money, and that really dragged them down over the course of the year, along with a lot of other components of the XLV, which is the healthcare index, and you can see it from pharmacies to hospitals. They've been struggling a lot. It's also related to interest rates. So if you're interested in playing the healthcare sector, they really require a lot of available cash. They're not really floating on a lot of cash unless you're United Health Group. So I don't mean to bore you guys with that, but these are important because this is, number one, the signal that earnings season is starting all over again, and that these banks need to stay and look healthy in this earnings report, and of course post some good margin. So let's move back to the chart for Tesla, and we can talk about a little of the price action that happened today, which is really interesting. So I didn't want to clean up the chart from what I drew on yesterday. So if you haven't seen that video, you might better understand what I was doing. But I was kind of drawing the potential of what the potential price action could look like if the things that we talked about kind of played out. So this is a daily chart. We're, like I mentioned in the beginning of the video, we're up 2.17%. Now, it's kind of interesting how we got there, but let's take a look at the minute chart to talk about it a little bit more. So you can see at this intersection of this diagonal line and the horizontal line, this is essentially where I thought we could end up by the beginning of next week, and we're kind of trending in that direction. Let me go back to the larger time frame. You can kind of see the direction we're going. So if this is us, it's very possible by before earnings that we could be at this very pivotal point, a pivot point, where we're at another high, which is the high from September. The diagonal trend line, that's a downward trend line since the high of $415 a share. It's been trending downwards ever since that point. There has not been a newer high taken by Tesla in many years. So if you see any pricing at this point above $290, then you could almost start saying to yourself, you have broken the downward trend. And now what would happen is, so we have tomorrow, which is Friday, Monday, Tuesday, and Wednesday. We have 4 trading days to either consolidate at this point or do this. So if we get here by Monday, what would happen is if we peek through, let's say bank earnings is really good, we'll peek through, and then ideally by Wednesday you would sell off to the downward trend line. Okay, so since we don't have a lot of trading days left and we're kind of getting to this pivotal point, if you believe in patterns, you kind of would want to see this flag into another another flagpole, and that would intersect at this point. If tomorrow is really good, this is what would happen. You could maybe expect getting to the downward trend line. Oh, maybe not. Maybe by Monday, because that would be a 4.5% move. That's just too much, I think, for Tesla right now. Because you can see a lot of hesitancy that happened this morning with Tesla when other things are ripping higher. Even other mega cap names, the Tesla price action was very lackadaisical. So let's say that's a 4.5% move. If you can get 4.5% in 2 to 3 trading days. So by Wednesday, you're sitting around the $290 mark. You'd want to get through the downward trend line, which is just diagonal again here, and then come back and sell off and test that trend line from the upside. And so when earnings happens, you can make the story now that Tesla failed the break and sold off after trying to get above if the earnings report is really bad. So that's the narrative. And the story for having a good report and it going up, if it goes up, then the narrative you'll hear is, okay, this is healthy because it broke through the trend line, it tested the trend line again, and then it took off. So that's something to look out for coming next week. So here's the minute action. So you notice that we had that gap up from the PPI report and the jobs came in. We just kind of sold off. And that was kind of disappointing because there's a lot of other names that were doing decently well. And the Tesla came out and got bought back up again. You're kind of noticing that this is kind of the area of short-term consolidation, this area here. And after it got back into that area of demand, people wanted to buy more Tesla and did. And it got bought up. And it, at this point around noon, maybe when Wall Street came back from lunch, and you kind of see this happening. So sometimes what happens is like right here, let's say it's 11 a.m. at this point in the small peak. Well, a lot of people in Wall Street are going to go get food. So what they're going to do is like, why hold something when you're not in the office to watch it? Just sell it. And then you'll see a sell before lunch. And then you'll have, this is all the algorithm trading. This is trading done by computers, basically with instructions to say, hey, while we're out to lunch, don't do anything. Don't do anything, okay? We'll be back. And when we get back, we'll decide if we want to buy. And it was around right here. You can see it's 11:50. They started buying. And then that was a really convincing, because if you measure from that low to the peak, which was the high of the day, it was a 3% move and it was pretty substantial. And a lot of the other market too started participating in this. Now, what caused this? Is it really PPI? Well, it's not just PPI. It's more so the fact that if you look at some price action on CPI and PPI days, is that you will have, you don't, sometimes a person isn't positioned, okay, for the CPI because they don't want to be positioned for the CPI. So that's why you see sometimes when you see gap ups, I call it, here's the gap up from yesterday. So really good CPI, perfect. And then you just have this sideways movement, literal sideways movement for the rest of the day. Well, number one, if you're not positioned for it option wise, let's say you're a trader, you don't want this trade to get away from you. So, and you also don't want to pay people out who are wanting to be bullish or bearish based off the price action and the economic news. So the best trade for you as a market maker or big money is to not let anything happen, because what you're doing with this time is either so what would happen is a person, a money manager or a trader, they would use this opportunity to accumulate a position or distribute their position that they had. So they're going to manipulate this pricing any way they can to keep it as flat as possible. And it gives them the opportunity to set up their trade for the next day and the following days. So when it happens with this type of gap up movement, I call this the non-participation rally, where they don't want people like you and me, retail, participating in what they're doing. They don't want us to have fun. So the idea is that you can't capture much of a movement intraday, and you can't realize your strategy during that day because they'll keep it sideways the entire day. So you don't get to participate by buying in. And if you try to short it, you also lose out too. So I call these like the non-participation rallies. And the non-participation rallies, when you see them back to back to back, they are rallies that Wall Street was planning for. So you can see by the next day in PPI, they didn't really have enough of a plan because the non-participation rally would be gap up, then gap up again, and stay flat, and with a slight buy at the end. So they had confirmation. So they really wanted to see confirmation of PPI just to be sure that inflation is indeed coming down. Now, I would say that PPI isn't a great reading for the inflation that we experience, but you know what I mean, that it would be a forecast for future inflation. So you can see that they didn't have a gap up that stayed flat. We had a gap up and it sold off. And this could be because for Tesla specifically, and Tesla specifically only, that there was a lot of people who wanted to de-risk around that $275 point, which was kind of also an area of interest for people who want to sell and take profit. But a lot of buyers came in and a lot of buying started happening. Of course, in the end of the day, you can see more volume started picking up on these green volume candles. And this was people are really excited for today because they can tell that Nvidia, and I'll switch over to Nvidia, and you can see Nvidia is insane today. Nvidia has been trending up. Now, Nvidia is a very large portion of the NASDAQ and the other indices. So the bullishness of Nvidia really makes sense. It really had a perfect kind of ascending triangle, like if I was to draw this trend line. So a lot of people are going today already pretty bullish and wanting confirmation from the inflation reports. But you can see this ascending triangle. You can even do like an imaginary pole if you want to call that, and then a breakout clean above it, and no red candles, all green candles over and over and over again to all-time highs. This is the previous all-time high. So the market is getting really bullish about AI, and Tesla is like a benefactor of that. You know, people realize that Tesla kind of has an AI story. So it wasn't too surprising as the day went on that people like, look, they're understanding something is that, number one, the AI story is real when it comes to not the ChatGPT side of things, because you probably heard reports this week about ChatGPT losing a little bit of interest month over month. But we're talking about the efficiencies that we spoke of yesterday when it comes to the business side of things, and when it comes to the people who manufacture the items, all the semiconductor companies, rather bullish. Now, I would say not every single semiconductor, stock is participating the same way Nvidia is leading, because Nvidia has a monopoly on AI chips at this very moment in time. I mean, even to the point, if you ever look at AMD, you'll be really surprised how disappointing AMD has been. And even like with a big name like Broadcom did not have a day like Nvidia did. Now let's go look at Tesla, so you can glance at its price action again here. So it was gap up into a red, sell into the red area, buy into lunch, sell before lunch, and buy out the rest of the day. Let's look at the S&P 500. And you can see S&P 500 is much cleaner, so it doesn't have the same sentiment. So you can tell that the S&P 500 and the Nvidia and other names, they didn't have the same price action Tesla did. And I really do believe it's because they have this, Tesla has an earnings report coming out sooner than other names. So they would want to be a little bit more hesitant. And I can confirm that. We'll look at one more chart other than the indices to try to understand if that's the case, that people are de-risking Tesla because earnings are coming up next Wednesday. But you had a clean, this is a clean example of a non-participation rally for a good while. So you have the gap up from CPI, gap up from PPI, and it was kind of consolidating until lunch. Well, this name was consolidating until 1 p.m. and then took off. So this looked like the typical non-participation rally for me. So I was kind of worried that I would get chopped up with my options trading, but thankfully at the end of the day, it came through. Just had to be really patient. So it was a gap up. And if you ever see these types of actions where it's gap up, flat, just know they're doing that to you on purpose. And the point is, it's really hard to capture those moves. It's hard to capture a move that's gapped unless you're positioned the day before. So that's why when people use the word consolidation, accumulation, or distribution, these words are essentially positioning for the next day, the next couple days, the next month. So people who are able to control the pricing, they are putting themselves in a position to take advantage of gaps up in pricing and gaps down in pricing, leaving very little room for you and me to make money unless it's getting bought up by everyone during the course of the day, or being sold by everyone during the course of the day if these are gap downs. So typically when it goes up, in the gap up style, typically it would be it would not be an obvious point of where to buy per se. It also just kind of happens towards the end of the day, or you'll see it kind of like in the CPI day. It happens in the beginning and sells off. On gap down days, when it's gap down, it will sell off all day typically if it's really bad news. So that's one of those things. So gap down, and it'll just make lower highs the whole day. So just you can keep, if you're trading, you can kind of keep an eye out on the chart like that. That happens all the time over the past year and a half. But the price action may start differing on selling days, because we talked about before in the previous video how there's a lot of 0 days to expiration options that would keep all day selling to a limit, and they would just be gap down, sell off a little bit, next day gap down, sell off a little bit, but nothing too major. So let's so you can see how smooth it was. And this is just a lot of really good sentiment when it comes to inflation. Also, we'll talk about 2 tickers other than Tesla, so we can better understand how this day worked, and you can kind of line it up. So I kind of want to overlay. I don't know how this is going to work. Maybe we can just, let me delete the range and see if we can add a symbol. And that symbol is going to be Coinbase. And you can see, and because Coinbase had such a large move today, that it's really putting the Tesla's move in a really bad proportion here, because Tesla looks incredibly flat on a 2% day compared to Coinbase's 25%, 24% day. So Coinbase went up like 24% today. And before we talk about why, I don't know if you guys really care, but let's look where Coinbase started taking off. And so at 11:30 in the morning, it had a nice gap up, not gap up, but it kind of basically looked like it's gapping. And by the time it was noon, when Tesla started going up, well, 11:50, you can see this right here where my crosshairs are on my mouse. This is where Tesla started getting bought. Is it all that surprising that it started getting bought when Coinbase was getting bought up in the same exact time? There was a lot of sentiment when it came to the overall market from this Coinbase move that really affected Nvidia, and it really affected Tesla mostly, though, because if you're looking at other names, it was really Tesla that was moving like this, unless the ETF is containing Coinbase like RKK. But I mean, like if you're talking about single ticker to single ticker, there was some sympathy here where people wanted to start buying up volatile names because Coinbase was going up. So I'm not saying that's fundamentally sound, but it is exactly what happened. So why did Coinbase go up? Well, there was a lawsuit with Ripple, which is ticker XRP, when it's a cryptocurrency of some sort, that won a lawsuit, and the judge ruled that tokens sold to individual people like you and me are not securities. And they're only considered securities when they're sold to institutional buyers. Now, I don't see how you reconcile that. That doesn't make any sense to me. But what happened is that a lot of people are thinking now that the SEC is going to have a tough issue with holding back Bitcoin from being, sold via Coinbase or other American exchanges, and it'll have a hard time with not allowing a Bitcoin spot ETF to be approved by the SEC, because one of the I know you guys probably don't care about crypto, but it did help Tesla today. That one of the things with crypto is that the SEC really doesn't want crypto to be existing in any way, shape, or form. Now, I understand the reasons why. The Biden administration really believes that it's just cryptocurrency is just a wrapper for scams and illegal goods purchasing, be it drugs or illegal firearms. So what they've been on a crusade against any exchange or any way to buy cryptocurrency in this country. But because one of the ways that they were kind of like not helping crypto is they never gave clarity to the exchanges, companies, investors about what crypto is and why it's a security. They never give clarity on it because they don't care to explain it. They always relied on 2 factors: either that they're going to make the rules for it, coming together with all the bigwigs of the crypto world, or they would require legislation to be approved through a different type of branch of government. Now, I understand judges and courts are not legislation, but it is giving credence to the fact that maybe that what's going to regulate cryptocurrency is not going to be the SEC necessarily. They will have to, of course, but the rules that they would regulate this type of asset by would be ones determined by the courts and legislation. So that's going to be an interesting battle. But 24% move really says a lot about what type of economy we're in right now. this 24% move would not happen even if this same event happened during August of last year. It just wouldn't happen because no one would want to be buying cryptocurrency in the first place. But there is a strong sentiment improvement with the overall market over the past couple months because I'll take that off. But because a lot of people have been on the sidelines, that if they feel confident that this is the market, this is the bull market, then they're going to get out of their money market funds, they're going to get out of their bonds and bills and CDs and get money flowing back into the market. So if you think that we've had our run, it's very possible that we did not have our run yet. That, okay, sure, we're off the lows from October, but we haven't made a new high on the S&P 500. We're not making a high on any indices. Sure, we made highs on other tickers, but like 95% of tickers are waiting to just even get near their high. Like some tech names are like 90% away from their high. I'm not saying they'll ever get back there, but it kind of shows that just because 7 or 8 names have the have beaten or are at their all-time highs, it doesn't mean the rest of the market is. The breadth has not the breadth of the market has not come through very well until the last couple of days, meaning the overall participation of every ticker in the market advancing. The breadth has been very, very low until a couple of days ago. So that's a good sign that, okay, if other tickers, and you've probably seen other tickers being bought up, then that could be a sign that the market still has more upward momentum, because there's so many people that are not participating in this market. It wouldn't be surprising if you talk to people who have not purchased any stock this year because they think a recession is coming. I'm not saying it's not. I cannot know that. But so far, it hasn't presented itself in 7 months of this year, not to mention last year. So far, what I'm trying to say is that there's potential upside because there's so much non-participation from other investors. Even institutional investors are sitting in bonds. They are not participating yet. But when do they? Like, how late do you participate? That's the real question. Now let's look at one more ticker. And let me see if I can just use a different window for now. I'll just change the IWM. Let's take a look at IWM. How is IWM looking? This is a small cap ETF. And it had a good day. Gap up, or not really a gap up. Slight gap up, close the gap, healthy, and stay flat for the rest of the day. Non-participation rally. This is a good example of that. Let's look up Netflix. And the reason I want to bring up Netflix is going to be, they're going to have an earnings the same day as Tesla next Wednesday. So let's see how Netflix is doing. So Netflix started the day here. So Netflix had a gap up, sell off, and let's overlay Tesla. Let's overlay Tesla on Netflix and see if there's any. Okay, good. So basically, other than the last little bit of rallying at the end of the day, their charts followed very closely. And the reason for this it was the reason I was talking about, is that there was that gap up, but that quick sell off. The reason for that is because earnings are so close, and these are going to be the first tech earnings essentially next Wednesday, that it's being de-risked. And so the people that hold these stocks, the people who are swing trading this and who don't have a lot of, I want to say the guts for it, but maybe the confidence on the performance of these quarterly reports next Wednesday, that they were not as gusto of buying the stock up. And a lot of people didn't want to touch it because they didn't want to be positioned in a way that, they can lose a lot of money next Wednesday. But as the day went on and Coinbase started getting bought up and the rest of the stocks started rallying even harder, so it kind of moved in the same way. I haven't looked at this chart until now, but I kind of guessed this is what was happening, that it moved very similar to Tesla, because they just happened to report on the same day, and that's really the only reason. Now we can overlay, let's see if we can overlay NVIDIA onto. And you can see how, you can see a stark contrast where NVIDIA gapped up and never sold off. And it was being bought the entire day. So you can see how the other tickers perform to the tickers that are being reported next week. And You can also compare this to JP Morgan, which is reporting tomorrow. And you can see if there's a risk off sentiment as well to someone that's reporting. Okay, yeah. So you can see here on the yellow line, JP Morgan is relatively flat, and it didn't really have much buying because people didn't want to be exposed to an earnings report that's coming really, really soon. NVIDIA will actually report later than all these other names by weeks. So NVIDIA and Apple, they report later. So they don't really, you won't get that kind of consolidation until maybe end of next week for NVIDIA. I'm not sure. It's being bought after hours probably still because people are really hyped about NVIDIA. And there's really good reason because, people think the stock is expensive, but in the reality, due to their guidance adjustment, which was like a 60% increase in guidance, that their stock should have went up 60% and only went up like, 50? So it's not necessarily expensive as it was before their earnings, ironically enough. But that's the market, and that's Tesla for now. So glad to see Tesla have a slightly greener day instead of not a green day or a flat day. But the reality is you can see that we're just consolidating. But this is kind of drawing that chart that I talked about before, which is, okay, what can this chart be? Well, this could be an inverse head and shoulders. Okay, so this could be this could be the head and shoulders, inverse head and shoulders that gets that with the shoulder completing near the downward trend line. So if you're looking at the stock, it is the left inverse, the head, the right inverse could be drawn out as well. And this could be very, very bullish for Tesla. And you can see this pattern in many, many stocks that have played out over the last couple months because inverse head and shoulders are basically a bottoming process on most time frames. So this could be a good thing. I'll kind of leave this drawing to see what happens tomorrow. I'm curious. I'll leave this drawing as is, and we'll see how the price action looks tomorrow. But thanks so much for listening, guys, and have a good night.